Have you ever wondered how Bitcoin started? Let's dive right in. Born out of the financial crisis of 2008, Bitcoin emerged as the world's first decentralized digital currency. The brainchild of an anonymous inventor, or perhaps a group of inventors, known only as Satoshi Nakamoto. Nakamoto's vision was a groundbreaking one, a currency free from government control, a currency that could be sent globally with minimal fees, and a currency that offers anonymity. This was the birth of Bitcoin. Nakamoto introduced Bitcoin to the world in 2009 through a 9-page long white paper titled Bitcoin, a peer-to-peer electronic cash system. The paper laid the groundwork for the complex mathematical and computer science principles that underpin Bitcoin, and with that, a new era in finance was ushered in. So, that's how Bitcoin, a revolutionary financial game-changer, was born. Now, you might be curious about this term you've heard, Bitcoin halving. What is it? Well, let's dive into the world of cryptocurrency and find out. Picture Bitcoin mining like a gigantic global lottery where miners with high-powered computers compete against each other to solve complex mathematical problems. The winner of this lottery gets a reward, and that reward is new Bitcoins. Now here's where the concept of Bitcoin halving comes in. You see, when Bitcoin was first created, the reward for mining a block was 50 Bitcoins. However, to control the supply and maintain the value of the currency, Satoshi Nakamoto, the mysterious creator of Bitcoin, programmed a halving event into the Bitcoin algorithm. This event, as the name suggests, halves the reward for mining Bitcoin approximately every 4 years. This halving event is crucial, and it's based on the principle of scarcity. Just like gold or diamonds, the fewer Bitcoins there are, the more valuable they become. By halving the reward, the production of new Bitcoins slows down, making each existing Bitcoin more valuable. So, how does this work? Well, the Bitcoin algorithm is set to produce 21 million Bitcoins. The first halving occurred in November of 2012, reducing the reward from 50 to 25 Bitcoins. The second halving happened in July of 2016, and the reward went down to 12.5 Bitcoins. The most recent halving occurred in May of 2020, and the reward is now 6.25 Bitcoins. Each halving event reduces the rate at which new Bitcoins are created, thereby limiting the supply. This scarcity is what drives up the value of Bitcoins. It's a bit like the law of supply and demand. The less there is of something, the more it's worth. Therefore, Bitcoin halving is a key event that significantly impacts the supply of Bitcoin. It's a fascinating aspect of the cryptocurrency world that plays a big role in the value of your potential investment. So, how does this halving event affect the value of Bitcoin? Well, the answer lies within the principles of supply and demand, a basic economic concept that most of us are familiar with. When the supply of something decreases while demand stays the same, the price tends to go up. This principle applies to Bitcoin as well. You see, Bitcoin halving reduces the rate at which new Bitcoins are generated. In other words, the supply of Bitcoin gets cut in half. But why does this matter? It's because Bitcoin's design is inherently deflationary. There's a hard cap of 21 million Bitcoins that will ever exist. This scarcity is part of what gives Bitcoin its value. So when a Bitcoin halving event occurs, and the reward for mining new blocks is cut in half, the rate at which new Bitcoins are created slows down. If the demand for Bitcoin remains steady or increases, this reduced supply can put upward pressure on the price. This is not just theory. We've seen this play out in real life. After each of the previous halving events, there was a significant increase in Bitcoin's price. However, it's important to note that correlation does not imply causation. Other factors such as market sentiment, regulatory news, and technological advancements can also influence Bitcoin's price. Another point to consider is that Bitcoin miners who receive Bitcoin rewards for validating transactions might be less incentivized to mine if the rewards are cut in half. This could potentially lead to a decrease in the network's security. However, if the price of Bitcoin increases sufficiently following a halving event, this could offset the reduced block rewards. In essence, Bitcoin halving is a fascinating event that showcases the cryptocurrency's unique monetary policy. It's an event that could potentially drive up the price of Bitcoin due to its effect on supply, However, as with any investment, it's crucial to remember that prices can go down as well as up, and past performance is not a guarantee of future results. And that's how Bitcoin halving can potentially lead to a rise in Bitcoin's value. Now let's talk about why people are attracted to investing in Bitcoin. Firstly, Bitcoin offers the potential for high returns. Over the past decade, we've seen Bitcoin's value skyrocket from just a few cents to tens of thousands of dollars. While the market can be volatile, this potential for high returns is a huge draw for investors. It's like the Wild West of investing, where fortunes can be made and lost. But with the right strategy, the potential rewards can be immense. Secondly, Bitcoin's decentralized nature is a major advantage. Unlike traditional fiat currencies, which are controlled by central banks or governments, Bitcoin is run by a network of computers worldwide, making it immune to government interference or manipulation. This makes Bitcoin an attractive investment for those seeking financial independence and control. Thirdly, Bitcoin's scarcity enhances its value. Similar to gold, there's a limited supply of Bitcoin, 21 million to be precise. This scarcity can drive up the value, especially as more people adopt it. And speaking of adoption, that leads us to our next advantage. Bitcoin's acceptance as a form of payment is growing. More and more businesses, from small local shops to multinational corporations, are beginning to accept Bitcoin as a form of payment. This growing acceptance not only increases Bitcoin's practical usability, but also its value as an investment. Lastly, Bitcoin is open to everyone. It doesn't matter if you're a Wall Street tycoon or a college student with a few extra dollars to spare. Anyone can buy Bitcoin, and you don't need to buy a whole one either. You can invest in just a fraction of a Bitcoin, making it accessible to a wide range of investors. However, like any investment, Bitcoin does come with risks, and it's important to do your research and understand what you're getting into. But for those who are willing to navigate these risks, the potential benefits can be substantial. So, these are some reasons why investing in Bitcoin can be beneficial. However, just like any other investment, Bitcoin also has its downsides. Let's navigate through the high seas of Bitcoin's potential pitfalls. One of the most prominent risks associated with Bitcoin is its volatility. The value of Bitcoin can fluctuate wildly in a very short span of time. One day, you might be toasting to your newfound wealth, and the next, you could be watching your digital treasure chest dwindle. This volatility can be quite unsettling, especially for those new to the exciting yet unpredictable world of cryptocurrency. Adding to the volatility is the lack of consumer protection. Unlike traditional banking systems and financial transactions, Bitcoin transactions are irreversible. If you send Bitcoin to the wrong wallet address, consider it gone. There's no customer service line to call, no undo button. It's a bit like throwing a message in a bottle into the sea. Once it's out there, it's out of your hands. Then there's the issue of security. Though the blockchain technology that underpins Bitcoin is secure, individual Bitcoin wallets can be vulnerable to hacking. There have been several high-profile cases of Bitcoin exchanges being hacked and millions of dollars worth of Bitcoin stolen. This risk is particularly pronounced if you don't take proper precautions to secure your wallet. Lastly, we have the regulatory uncertainty. Bitcoin operates in a legal gray area in many countries. While some nations have embraced cryptocurrencies, others have outright banned them. This uncertainty can lead to sudden changes in how Bitcoin is regulated, which can impact its value. To sum it up, Bitcoin is a high-risk, high-reward investment. It has the potential to yield incredible returns, but it also carries significant risks. Understanding these risks is crucial to making informed investment decisions. Remember, it's not about being fearless, but about knowing what to fear. Therefore, while investing in Bitcoin can be lucrative, it's important to be aware of the risks involved. So now that we've explored Bitcoin and its halving process, what's the final takeaway? Well, it's clear that Bitcoin, as a decentralized digital currency, presents a unique investment opportunity. Its halving process, essentially cutting the reward for mining in half approximately every 4 years, has historically had a significant impact on its value. This can lead to potential gains for investors. However, there are also risks associated with investing in Bitcoin. Its value can be incredibly volatile, and the lack of regulation can pose potential security issues. It's also essential to remember that the future of Bitcoin, like any investment, is unpredictable. So, while Bitcoin may be an exciting and potentially lucrative avenue to explore, it's also crucial to tread carefully. Conduct thorough research, understand the market, and consider your financial goals and risk tolerance before diving in. Remember, knowledge is power, especially when it comes to investing. Stay informed, stay smart. Before we wrap up, we want to take a moment to thank you for joining us on this journey through the world of Bitcoin. If you found this video helpful in understanding Bitcoin, its halving process, and the potential risks and rewards of investing in it, we'd appreciate it if you could support our channel. How, you ask? It's simple. Just hit that subscribe button and turn on notifications. It won't cost you a Bitcoin, not even a Satoshi, but it will go a long way in helping us grow and provide you with more informative content like this. So don't forget to subscribe and turn on notifications to stay updated with our latest videos. Thank you for watching, and thank you for your support.